Hello again, traders, and welcome out. This is Untitled Maverick Currencies here, and this is our currency room for the upcoming week, where we're going to break down this week's price action and talk about a very important week coming ahead. So there's a lot to talk about, so let's get into it. So make sure that you're following your trading plan. You're always doing your due diligence. So let's get into it. Last week was a very big week. I mean, in terms of volatility, there was a lot of movements. So a huge rebound on Friday. We got the biggest rally since June. So that was a bit of a positive way to end the week. The yields have continued to climb. Again, we are up 12 weeks in a row, which is, again, remarkable as we look back in history. Now, another important event on Friday was the Bank of Japan that intervened in the markets again after the dollar yen was up above that 150 level. So I've talked about this the whole last week. It's interesting how the Bank of Japan has to wait so long to really intervene. The drop came after the dollar yen was up, I think, about 151 and close to 152. So again, this is very big levels that this pair is breaking again, going back to the 32-year low in the Japanese yen against the dollar. So we are getting another intervention. Pair again rallied for 12 days in a row. And again, we kept looking at this and said, well, we have that risk, the potential risk that Bank of Japan can intervene any time. And sure behold, they did. So it's interesting, the timing for these interventions. We'll talk more about it when we look at the dollar yen chart. But so far, the last time it didn't really boost the yen levels. So let's see what happened this time. But again, we have the Bank of Japan meeting this week, so we'll be really looking for the yen crosses and potentially looking for what's the next move in the yen. So last week, again, outside of this volatility, let's take a look at the news events. We had, again, the CPI out of the New Zealand was actually pretty high, 2.2% versus the 1.5. So that actually helped the Kiwi to stay stronger. I must say, the Kiwi actually showing some relative strength. Finally, after few months of underperforming, we're now noticing the Kiwis actually doing much better. Outside of that, really not a whole lot of notable event risk, with nothing really big out of the Australia, where they had a little bit weaker employment report, but that didn't really cause a big move in the market. So right now, what's relatively important right now in the markets is the yields, the inflation, and that's really what's driving the market. So I think we really need to focus on is this next week, where we have another central banks of events of chain that we are actually have on the docket from Bank of Canada and ECB and Bank of Japan. I think these are the ones that are really moving the markets along with these CPI figures. So let's take a look at last week events and break it down where the biggest percentage move was and where we need to focus on. So as we take a look at this chart, this performance here, actually, let's go into the equity markets. A nice bounce. And again, if you take a look at the price action from last 2 weeks, we are actually seeing an upward trajectory. Of course, in between, we're getting a lot of back and forth and volatility. It's not a straight cookie cutter, simple V-shaped recovery. This is actually a bit of a very choppy, either we can say it's a recovery, or we can just say this is a wide range that it's actually moving in. Again, this was a notable candle here. That was after the CPI release just a couple of weeks ago. And then here we are getting nice little recovery here. So we definitely want to be looking into next week. We are above the 20-day moving average. Notice that we haven't really above the 20-day moving average since pretty much at the end of August. Markets has been really bearish since the middle of August, and as you can see right now, it's trying to get above it. So as we start to push the higher levels, we'll probably see a little bit more risk on rally. The sentiment changes, and I think we'll see the change in the markets, because in the last month and a half, 2 months, it's been very one way or single way markets where the direction has been mostly downside. We get some rallies in between, but those rallies don't really have much to stand on. So those rallies have been just a selling opportunity. So I mean, right now, we are seeing a bit of a pullback and we're seeing a buying opportunity. So this markets are moving, and we have to really stay on the right side of the markets, understanding where the next big move is. Just realize that we're still in a downtrend, but within a downtrend, you can get some very powerful rallies, which can get us above the 20, the 50. So those rallies we can still take part of, because those can rally still for a few weeks before turning lower. Now, outside of that, if we take a look at the percentage return, I mean, SPX was up 4.74%. Again, the biggest biggest week we've seen since June. Across the board rally. VT as well. In the crypto world, again, not an encouraging sign that it only gained 0.25%. This was a week where we could have seen more gains in crypto, but this is one of the reasons why we are not really a big fan of cryptos here. Gold, again, have a nice little rally for the week, and then oil was actually down slightly. So as we take a look at the percentage changes for the currency market, you can see where this is a big sort of gaining week overall, with Kiwi leading the chart with a 2.19% gains, followed by the Aussie. CAD was mostly flat. And on the negative side, we have the dollar being the weakest currency, followed by the yen and the Swiss franc. So as you can see, it was a pretty typical risk-on environment where the growth currencies kind of gained and some of the safe haven currencies kind of lost. So interestingly, the yen still was not able to gain to close out the week on a stronger note, even with the intervention, because that came really late Friday after the London close. But outside of that, you know, the dollar was a notable change because the dollar has been only one direction, that's been on to the upside. So we saw the yields kind of moved lower a little bit, and did the dollar. The Swiss franc actually showing a relative weakness to me because it's slowly actually losing its strength, and again right now down 1%. The euro is actually doing a little bit better, so look at the divergence. Remember, not too long ago, just month and a half ago, we had the opposite, where the Swiss franc was actually a lot stronger and euro was actually a lot weaker. So if you take a look at the relative strength of weakness between those two, the euro Swiss franc pair was actually going lower. Now, actually, if you take a look at the euro Swiss franc pair, is actually on the rise, which means it's telling us that euro is relatively doing better than Swiss franc. Now, the British pound has been mostly flat after, you know, we had that very big last few weeks. And then now we're just seeing some consolidation where the score, the relative strength score is still stronger, but in the shorter term velocity is actually weaker. So pound will actually kind of shelf it a little bit. I think this week we are really keeping a close eye on the euro, and most importantly, because we have the Bank of the ECB is going to be coming out and probably raising rates by 75 basis points. So outside of the currency market, let's take a look at the crypto markets. You can see really a mixed bag. So this is where I think we have not been a big fan of crypto, and I think so far there's no real reason to be, looking forward to cryptos unless we see a change in the markets. So let's do a quick market analysis and break it down, the numbers, look at the price action. So as we can see in this market outlook for next week, we are seeing better scores coming out of the equities. I mean, we were sitting at a -3 for the most part. And here we are getting a little bit of bump in the score to only -1. We are above the 20 moving average, which is a good sign. We're still below the 50, but again, there's a nice little area for this pair to rally up to this level. And outside of that, again, let's take a look at the VT with World Stock Index doing the exact same thing, seeing a turn. Remember, we have been in this downtrend since mid-August, so this is a bit of a positive sign. It's just telling us that maybe there's a much further upside potential in the shorter term. Now, crypto, we can take a look at the chart and forget about it. I mean, still in a low base, and also pay attention to the volatility. The volatility has been nothing but declining, and this is not an encouraging sign if you're trying to take advantage of the short-term moves. Now, comparatively, if you take a look at the equity markets, we are seeing a positive ATR, which is telling us that there's been a lot of movements in this market, especially in the past 2 to 3 weeks. So it just gives you more shorter-term trading opportunities, and it's actually much better for trading than a very low environment with not a whole lot of volatility. So let's talk about next week, because next week is a really busy week when it comes to news events and the central bank announcements. So starting with Monday, I mean, next week, every single day looks like a good trading day to me. On Monday, we have some of the European PMIs, and I think I'll be looking at Euro early on. But again, we're also now paying attention to the equities. If the market rallies or adds on to the gains from Friday, I think we can see a bit more continuation of what we saw on Friday. On Tuesday, again, we have the Aussie Cpi. I think I really like these CPI numbers because this really helps. I've noticed some good moves in the currency, so we'll see if this number coming out hot. I think that should actually help the Aussie as well. We have the China's GDP number, which again, for instance, last week is keep getting pushed. So I'm not sure if this will really come out. So I would say just keep an eye on the schedule, but don't be surprised if you see that date change to some other date. Wednesday is important. We had the Bank of Canada rate statement. I'm paying close attention to this. They're looking to raise rates by 50 basis points. I won't be surprised if they come out and do a little bit more aggressive rate hike. I think the trajectory right now for the central banks is that to do one more big one and do another small one in December. We got a report not on Friday, which actually helped the markets because that's what it was really saying by the Wall Street Journal, that the Fed is looking to raise rates, but then start to do a small one in December, start to slow that trajectory. Remember, we have been raising rates across the entire year. I mean, looking back in March and April, I mean, there has been continuation of these. So I think if we start to see a slowdown, I think that's where currencies will really meet a test, because it's not about this rate hike. This is already priced in. So what's the big focus is, okay, what's the next? What's coming up next? And that's where the further expectation is really what keeping the currency standing. Otherwise, we see a bit of a buy the rumor and sell the news. So if the Bank of Canada says, no, we'll be continuing raising rates, I think they'll continue supporting the CAD. But if they say, okay, after that we'll be data dependent, or we'll see, that will could be a little bearish for the CAD. Overall, remember, CAD has done really, really well compared to his major counterparts like the Aussie or even the Kiwi. This has done really well. So this will be important to watch. ECB on a Thursday, they're looking to raise rates again by 75 basis points. There seems to be, playing a catch up. So I think in the short term, we could see Euro start to climb a little bit. And again, the big test this week will be if the Euro USD can actually break above that parity level. We've been below that parity level for a little while. And again, not just against the dollar, but if you take a look at euro against the Swiss franc, but I'm seeing a bit of a change in the trajectory. So this will be important to watch. And again, most important would be also Bank of Japan. Again, it's very clear the Bank of Japan is reluctant to make any changes to their monetary policy, but they are concerned about these exchange levels, so they come and intervene. So intervention really hasn't been as helpful. We saw the last one in September. It provided a short-term rally, but that's it. And then we start to see a diversion in that trend. And now here we are on Friday. We'll see what happened this week. So last time they actually intervened after the Bank of Japan, the monetary policy statement, when they decided not to do it, the dollar yen spiked up and then they came in and intervened. Now we're doing it. Now they actually did it going into the support. So we'll see what kind of outcome will be from this. But remember, this is where the big movements are. And again, I won't be surprised one day when Bank of Japan decide to alter their policy. There will be fireworks off of that. But again, keeping a realistic expectation, not really sure this will happen this meeting, but something to always be mindful of. On Friday, we have the Canadian GDP, and then we have the PCE price index from the US. Again, always important to take a look at these price indexes because inflation, again, still remains a concern. We need to see these numbers cool down in order to, bring some of the expectation down for further aggressive rate hikes. So again, this is next week. Looking for markets to extend the Friday's rally. But most importantly, again, keeping in mind, we're still in a downtrend, but we're expecting bear rallies. So if the market changes its trend for the short term, that's where we have to adjust our gear and move towards where the market is moving. Now, central banks, like I said, 3 important events that's due this week. This is market moving events, so keeping a close eye on this, and then economic reports as well is pretty busy as well. So I'm very excited for next week with this movement here. So let's do a quick currency analysis. Let's take a look at study our currency baskets and see where things are moving and where we need to pay attention to. So let's start with the crypto outlook, and as you can see, crypto outlook is not as positive. But if you take a look at the charts, in the shorter term, we could see some sort of relief rallies. But right now, ranges are very tight. So I don't really love the price action here. Ethereum, again, they're all shorter term. They're trying to kind of go above. I won't be surprised we can actually get above a decent level, have a little decent crypto week. But I think the bigger movement's likely to be in the currency market. So let's take a look at currency markets. Start with the dollar. So dollar end of the week, interestingly, we haven't broken below the 20-day moving average. Last test was in September, but it really going back to August I mean, this has been very much a one-way trade. I mean, I like the fact that it did break lower. Again, this also has to do with the Japanese yen, rising, because that's where we got the adverse price action. The yen gains and then the dollar falls. This also then compounded with falling in the yields, and then we also saw a nice equity market price action. So let's just say that if the narrative continues next week, I wouldn't be surprised if the US dollar tried to move lower in the shorter term. So at this point, I don't like the dollar long, but I do like the dollar short. That's the way I'm looking at it next week. And this is how this whole week is going to be. Because if you look at the trend score and the velocity scores, we're getting the opposite. But again, this is where if that is about to change, we can see the trend score kind of go lower this week, and the velocity continues to also pick up as well. So we are seeing the dollar actually had a nice little move here. Again, remember this is a 4-hour chart, so we've got 2 candles here. I would love to kind of see a bit of a bear rally or a base to continue moving lower. So that's the dollar here. I think you got to really watch out. This is a big level of resistance, but there's further downside likely. Now, the Bank of Japan, again, Japanese yen chart, it doesn't look that great. I mean, look at the big wick on this. I mean, even with the intervention, we did not close at the highs on that candle. So I think next week will be interesting to see if this continues further up. But if you look at the chart, I think you just really need to kind of use some caution here. And be aware of the Bank of Japan press conference that's later this week. So I'm actually curious to see how this Bank of Japan or this Japanese yen will turn out. If you look at the preceding to it, I mean, we were down 12 days in a row in the yen. So I wouldn't be surprised if it maybe to do a little pullback and start a rally a little bit. So I actually do like yen a little bit on the upside, but that's again if everything kind of lines up. But again, keep an eye on this variation here. We got a -2 trend score, but we have a +2 on a velocity score. So a lot of mixed. This is what we see. A lot of mixed scorings this week. Now let's talk about yen or the Swiss franc. Now Swiss franc, actually, you can see that it's actually slowly moving lower. This is a very slow move. But you can see that we actually this look more like a little bear rally to me. Like this is where it established a lower high. So far has been a higher high and a higher low. Now establishing a lower high, and this is exactly at the level. I think this will break this 50-day moving average, and as it does, we can expect this to actually go down, test the September lows, and this is where the next support level is. So I'd really like Swiss franc next week as well for a potential opportunity. But same thing. I mean, this looks a little bit better because the trend score is a 0, but velocity score is a -2. So this seems to be carries a little bit of risk as we compare to the other currencies that has 2 opposite scores. Now the euro, even with this pullback last week, nothing really has changed. We are still seeing markets actually staying on the positive end. So we'll just continue to, I think, look at the euro on the upside here. So scoring hasn't changed on the trend. Velocity did change a little bit in the shorter term, you can see. But again, I think that could change or resume onto the upside as well. Maybe this is a short-term movement. Now, looking at the British pound, you can see we are on an uptrend in a shorter term. We can see the movements that's taking place in the pound, but in the shorter term, we actually are slowly bleeding. Actually, like right, this price action is not giving us any confirmation. So unless it can get above this moving out or this little downtrend, we can kind of play that upside on the pound. But right now, I don't see a sign here. +2 on the trend score and a -2 on the velocity score. So Canadian dollar. Again, this is another currency that we are paying attention to this week because of this upcoming Bank of Canada rate statement. And you can see that this is a very choppy currency. One of the things that we do see is that the CAD is no longer the strongest currency that we saw early this year. I think we're seeing a bit of a pause. This thing hasn't done for a month or two. I'm actually looking forward to see how this CAD will turn out because so far, really, it's been doing nothing for the last couple of months. So if you can break any significant levels, that's where we're going to come in. I don't really have a big bias on it. I think we can see a buy the rumor, sell the news kind of price action. But again, 0 on the trend score and a -2 that we have on the velocity. But this is again a tough currency. Whenever you're dealing with these 0 on this trend, it just doesn't give you those multi-day opportunities because the price action is short-lived. So we need to see the trend score get a little bit better, maybe go down to a -1 and -2. That's when we'll start to see better movements in CAD crosses. Now, let's talk about other currencies that are sitting on the opposite end. Look at the Aussie. I mean, Aussie has been a difficult currency to trade. I mean, there's good shorter-term opportunities where you get in and you get out. If you're trying to ride a trend, this is a very frustrating price action. If you take a look at the range here, I mean, this is a 1.5–2% range that we're currently dealing with. So I think as we are breaking out of this range, we tested that 20-day moving average. I think this can further get up, especially if the price action or the market start to look better. But keep in mind, now we are seeing Kiwi actually doing much better. So personally speaking, if I have to really go long the Aussie, I think I'd rather go long the Kiwi because, first of all, Kiwi has been definitely much weaker than the Aussie. But now we are seeing a change in that trend. We kind of bottom out here. And now we are trying to rise here. So notice that this is already, this has already been above the 20-day moving average, but now it's testing the 50-day moving average. So I think a further upside could be in this currency pair, or this is a better looking currency compared to the Aussie. So as far as the trend score and the currency score goes, I think we are pretty clear. We are pretty clear that we are getting a lot of mixed signals. Some trend scores are positive, but velocity scores on the other way. So what is bullish trade and what's in the bearish trades? I personally think as we see a continuation, we can see continuation of what happened on Friday, which means that we can see the dollar maybe take go down initially. The yen, we have to kind of decide some kind of in the middle here. Swiss franc, I like it to the downside. Euro on the upside. And again, pound, I'm not really, I'm putting on the shelf for the shorter term. CAD, we'll see on the Bank of Canada, but I really like the Kiwi here. I will pay attention at some of the Kiwi crosses because I think that's where the movements could happen. So this is, again, if you look at these trend and velocity scores, mixed signals, but what we're looking for is continuation on from Friday's move. So let's take a look at some possible trades and talk about our next week. So let's start with the currency baskets and take a look at some of the key technical setups that we are looking at this week. So there's one thing I do want to point out because this was one of the things that has been difficult for some traders to kind of grasp on is the volatility aspect of it. If you look at the price action, I'm going to start with the dollar here. You can see that July, August, September, volatility was not really a big issue, which means that it's easier to ride some trends and movements. Look at this right now. The volatility picked up, in a big way in September. And with the volatility being this high, and let's go back in time. We are at the highest level of volatility since this 2020. Look at how crazy the volatility got around that time. But if you really go back in time, you'll see that the volatility is the highest level since like this 2015, 2016 area. So you're dealing with markets that are very volatile, and in the currency market, we're seeing the volatility being the highest in the last 2 to 3 years. And if you're finding this market price action being a little difficult or hard to understand, like this you had to really pay attention to the volatility. But so look at the ATR, looking at the 14-day period, as you can see that we are seeing volatile environment. So this as markets start to fall and the volatility start to fall, it'll get a lot easier to write some trades, to write some trends. But I think for now, you just have to really pay attention to this volatility portion. Now we're seeing the volatility actually coming off a little bit here in the Aussie. Even in the Kiwi, you can see that the price action has been a little bit more stable. So volatility is coming down, but this is going higher, which means that the conditions are getting a little bit better to trade. Same thing outside of the other currencies. We'll notice that we actually did peak in that volatility, and now we start to just come off a little bit. And everything else, look at Swiss franc, like how the volatility was crazy back in September. Now the volatility is kind of moving lower. So this is a good sign. This is a good sign that the volatility is improving a little bit, and I think we onto the downside, which will allow you to be in trades for a little bit longer. I mean, look at the Japanese yen on a daily chart. You can see the volatility has been declining for the most part, and we got to start picking up volatility. I think the yen had a lot of volatility on a Friday, just itself because of the intervention. You can see the volatility picked up the most going back to the last intervention that was in the end of September. We're seeing a very similar price action. So we'll see how the yen really unfold, because let's go back to the September 22nd when the last intervention happened. You can see initially big move, pull back, rallied again, and it kind of stayed up to kind of like stay stronger. Like it didn't fall apart for like a couple of weeks. Initially, I think it held that level. I won't be surprised in this case. You know, we see these similar kind of price action. We kind of trade in this little wider range, but stay in that box. I don't really expect the yen kind of go down all the way, because I mean, look at the levels that's really coming off her. So I think as we take a look at the yen, use caution. When volatility picks up, you really have to loosen up your stops and kind of deal with that fluctuation. But if you take a look at what's a low volatility looks like, I mean, look at dollar yen going into this intervention. I mean, look at this beforehand. As the price action is breaking out, the volatility is dropping, which means that this is much easier to trade. So if you're trying to find trades or pairs that would last you longer, what you need to see is a continuation of the upside with a drop in volatility, because these are much easier to trade. So you can see that this thing has been up for 12 days in a row. I mean, I was actually this is one of the charts that, you see things happen, but you have that risk of an intervention, which really keeps you out of it. And here we are, got a big move. It went from 151 or 152 almost down to 146. That's a 600 pip move. But also in the percentage change, this was the biggest move that we had. If you look at the charts here, this is the biggest move we had almost since July. I mean, July 28th, remember, that was a big move in a lot of the yen crosses. We got a comparative move in August, but again, we haven't really had this big move on the downside of this pair. So I'm really keeping close on the dollar yen. If the dollar is peaking in the short term, and I mean, we already know the dollar yen is sitting at some extreme levels, this will be one to watch. If you take a look at the chart or the 4-hour chart, I mean, we have even to get back to this previous level, I mean, that's for 141. So these huge numbers that we're dealing with here, I like to see this maybe rally a little bit, base a little bit, and go lower. That's a trajectory that could be it. But this is one of those volatile trades. But we can also kind of find opportunities in places where we just get less volatility. So let's go back to the ATR. And we'll see on the ATR, okay, on a daily chart, I mean, we are seeing volatility come off in the Kiwi dollar. So I really like Kiwi dollar, especially if this can get above this area of 158. I think this can easily get towards 59. There's not a whole lot of the technicals here to stop it to get to 59. So this is a level that I really like. I think I like Kiwi crosses in general, because the Kiwi we've been one of the weaker currencies actually doing much better. As you can see that when you take a look at Aussie Kiwi, this is another currency pair that I've actually liked. I mean, this is the one that I'm watching all summer, and this has been a very stubborn currency. I mean, we got up to this level. You can see we broke above that level. So that's where I kind of just gave up on this and said, well, maybe the Aussie Kiwi will continue moving higher, but we are back in the range. I mean, this big resistance is sitting at 111.80. And this is now at about 110.69. So this is a good kind of proxy if you're looking at, should I go long the Aussie or should I go long the Kiwi? I mean, pay attention to this. In the shorter term, I mean, you can see all time frames are pointing out to the downside. So I think once it clears out this 110 area, there's a lot more further downside risk in this. The good thing is volatility is also coming down in this one as well. So this will be interesting to watch how it unfolds. So another pair that I do like as well. I mean, take a look at some of these currency pairs that have been getting hammered down. Like Kiwi CAD has been on the down trajectory. You can see this is trying to get above this, getting closer to the 50-day moving average. So this looks a little bit better. Kiwi Swiss franc, some of the Swiss franc crosses I really like, and you can see this is already breaking above the 57 of the resistance. Volatility is dropping. This thing is going up. I think this could easily could be a trade that we can ride without much of that volatility risk. So if you're trading the yen crosses, you're going to experience some volatility. But I think with Swiss franc crosses, you're experiencing less volatility, so it's going to be a little bit more of a smoother ride. So same thing, we're looking at Aussie Swiss franc, probably in the same trajectory. It's trying to break above. So Swiss franc will be, I think, number one on my list with the dollar. And then the yen would be, I don't think I like the yen as a short side. Again, I think that trade is overplayed. If you're looking for more downside, I think we can look into the dollar. We can look into the Swiss franc. But as far as the gains goes, I think the Kiwi and the Aussie and even the euro. I mean, let's talk about the euro and the Swiss franc here. So if you look at euro Swiss franc, you can see, okay, well, this thing has been moving lower, and we got it to this record 95 level in the euro Swiss franc, and look what's happening. We're seeing a recovery, and look at the volatility is dropping. So we are at the lowest volatility, I mean, going back to August. So I think at this point, we are above the 20 and the 50. So look at the 20 crossover above the 50. This is a bullish sign. We got a bit of a wick on that candle, but I think any pullback, I would love to see this pullback to buy into. I mean, euro Swiss franc, I mean, it's still sitting at 98.28. With this ECB rate statement coming ahead, I think this has a potential to get at least to the parity level. I think that's a big challenge for euro crosses, to get at least to the parity level against some of the currencies that, are pushing this extreme, like euro dollar. This is another one that I like going to this week. Again, it's been a clear downtrend, but if it breaks above this 99 area, I think this can easily test the parity level of dollar. Remember, going back to August, I mean, this thing was trading between the dollar to a 102, and then, we almost went down to 96. So I think this in a downtrend, but this could break that downtrend if we get further continuation up here. So I like the chart here, especially if it gets above that level. But euro Swiss franc, you can see this thing is already turned. It's already above those moving averages. So I think there's a decent chance for that currency pair to go. But realize that those are slow moving pairs, which means that they just move in a snail's pace. But you have that continuation, and you have less of that volatility. So that's what these pairs get you, is they give you less of that because they're so correlated. When the deviation happens, then you just a continuation. If you look at what happened back in June, July, and August, we had that continuation because the divergence was taking place. So if the divergence is taking place here, then we need to see this kind of move along as well. But outside of that, again, I think Kiwi, we already looked at it. We have Aussie Dollar. This is, again, all the dollar crosses will give you a little bit of that reversal signal with that break that we got in the dollar on Friday. Lastly, dollar CAD. Again, a lot of the dollar crosses are sitting at these extremes, and you can see that this has been very volatile dollar CAD. And if the volatility started to come down, and if it's already break that 20 moving average, I think that this can at least get towards that 134 to 133 area. So those are the levels, those are the pairs that we are watching going into next week. I think it will be a great trading environment with this a lot of news events on the docket and a better market environment. So again, markets are trying to carve out a bottom in the shorter term. So pay attention to, don't be committed to the short side. I think we can see a little bit more upside in the shorter term. So I'm looking to trade around news events, looking to trade around what we discuss. And as a trader, you should always go in to the next trading week with a premise. What's your premise for the next week? Are you looking for a recovery? Are you looking for a continuation? And then as the week progresses, make sure you're just putting the pieces together and then following the narrative that you have researched. So always, I always find traders not going with a plan in going to a week, always make sure you have a plan. That way you have you can not really get cobbled with this volatility, but have a little bit more clarity on the direction. And focus on felt relative center weakness. Thanks everyone for joining. Enjoy your rest of the weekend, and then we'll be back in business tomorrow, and then continue with the classes. Again, pay attention next week. We have lots of news, lots of recordings coming out. I think we'll be meeting on Thursday for the ECB rate statement, but outside of that, we'll be doing a lot of previews for these central banks, so like the Bank of Canada rate statement, ECB rate statement, and the Bank of Japan. Will be doing classes on that as well. So make sure you're watching out the schedule as well, and take care, and we'll see you next week. Cheers.